Hello dear traders, petar.jacimovic here. I want to post my trading idea and wanted to inform you about my new position. This is more short-term position, short-term oriented position, and I want to explain using the market profile structure and trying to read actually what's going on the Japanese yen. I did some some analysis. I pretty much observed trying to understand what's actually the price trying to tell me, and try to understand this behavior using what you see here is the TPO chart. It's a time price opportunity. Basically, it's a market profile. Every letter here is for a 30 minutes period. Every profile, like this one, it's representing the 1 day. So if you don't know, as I said, the basics about the market profile, I always say market profile. It is relatively a new approach in the market where we observe and we collect price in a different way. We don't have candles, we don't have bars, we don't have anything like that. Everything is written here in the prints here. I can zoom in to show you here. So this, you see the prints. The more price spent time on specific levels, the more prints you will have on that level, which representing the point of control, or the representing actually point of control, which is the where the price trade most of the time during the day. Also this rectangle, you see this box here representing the value where the price trade about 70% of the time during the day, and so on and so on. You have a regular print starting from A and then going B, C, D, every 30 minutes. So again, every letter is worth 30 minutes in this example using the 30 minutes, the time frame. Okay, so what I found here is basically opportunity to try to catch about 1-3 ratio. That's my general idea. So risking about 50 pips, trying to make about 150 to 180 pips. So I saw the opportunity and I definitely want to try this and see how this will play. I have a 1% risk on this example. We'll try to make 3%. Again, this is a maximum I can afford to lose, so 1% from my account. I don't advise anyone to risk more than 1%. You can risk 0.5, 0.3. It depends of your appetite of risk. So in this example, I'm risking about 1%, and we'll try to make about 3%, so 1 versus 3 risk reward ratio. Okay, now let's go to explanation and explanation about this buying opportunity on the USD versus Japanese yen. Okay, so as we see here, let me try to zoom in more. Let's go on this way. As you see this day here, for example, this day here, where we started this downward movement, we see that 1, 2, 3, 4, 5, 6, 7, 8, 9 days. 9 days price basically was going lower. Okay, but I was interesting to actually see what caused this this selling like this from this point, and I didn't find anything big in the price. Basically, there is no big selling tail. Selling tail actually represents a single prints, something like you see here, a G prints or D prints. So these are selling tails. Okay, so I didn't find the selling tails on the top side when this downward moment actually started. For me, that's one big clue, because there is no big selling tail. Actually means there is no big institutional money there. So there is no big reaction here, which will actually cause this drop. So in my opinion, this is not something like changing in trend dynamic. It's more like short covering from these buyers. So they did a short covering. So it's more short covering because it's a clearly, we have a one single print, pretty fat distribution on the top, which wasn't tested in the next day. Basically, price didn't test this big point of control, and price just went lower from that point. Then also price left this point of control untested in the next period. So basically, in my opinion, since we have the pretty fine upward trend, in the background. They are just short covering. So these short-term, mid-term traders basically did short covering of this because they was, scared to, hold their buying positions and so on. So they start to do some short covering, and then and then try to benefit on that short covering, and then potentially recontinue their strength actually they started. If I go if I open USD yen chart, regular chart, let me do that. If you go daily, let's put just very simple black and white. Okay, so this is a daily, right? This is a daily. You see that they started, we got this let's say accumulation, and after the Trump won the election there, in the US, we saw the big demand here, and price went into some kind of correction. That makes sense. So this is for me short covering. There is no big reaction on the top actually, which can tell me that yes, they basically yes, they basically started to change actually behavior, not just to do the corrective. So I don't think so that they actually stopped at this point here. For example, if you check in the past price action, this is again daily time frame, you see the big sell-off in this bar. So that can be a changing, and that was a changing in into the trend dynamic basically from this point. But it actually was caused by this massive sell-off. Here you cannot find anything big, so there is no big pin bar or big selling tail from the top. There is no big supply entry. Basically, it was just going steady and pretty steady lower. So in my opinion, this is the only correction of this upward leg in the background. So that makes sense. So this is about the bar chart. Okay, now let's go to our profile chart. Okay, according to profile chart, these 2 point of controls are not tested, right? This is a point of control, this point of control, they were not tested. In my opinion, probably they will revisit, they will visit this in the next period. I don't know when that can happen, but I'm aiming in the near future, so maybe in a few days, or maybe even in one day, who knows, I'm aiming that actually price test this point of controls, potential these zones, which you see big fat point of control here, price pretty much like it is point of control. I mean, they like this price. So in my opinion, all of this about 1, 2, 3, 4, 5, 6, 7, 8, 9 days, they are pretty much short covering from these buyers we saw previously on the bar chart. Okay, so what was actually causing me to trigger this? Because you need to be very patient with this. Even you realize this is a short covering, you need to know when is the good time basically to actually start potential buying, your buying. And market profile is very good in that, because in this zone you actually don't have anything big actually where you can actually buy, nothing big here. We have a 3 inside days here, price went lower here, but we know that we don't want actually to do anything for the sell side on the Japanese yen at this point. So basically price actually dropped lower and then find another balance here, and then 3 days price traded here in past 2 days inside of this here profile, and price traded, and then price today went higher. This was a, for example, trigger for me, because we went out of 3 days base, and this confirmed. And also notice the higher value, this box here representing the higher value. We have a overlapping value here, so this value went above. Finally the value went above, and we went out of this 3 day base. So that was pretty much my trigger. I was watching this to see how this will develop, but anything here, this wasn't good for any buying, but this make big sense for me to actually buy here, for example, to this zone here, and then see how the price will actually react to this zone, and to see how that will play. Okay, so this make big sense for me, and I will try to ride this 150 or 180 pips upward if if I'm correct on this one, with a risk about 50 pips. So that's make a big sense, going for about 1-3 ratio, and have a pretty good clue of actually what's going on. So why not if the price go lower and take this single Prince F, Notice here that we have a single Prince F in this breakout. So if the price reach this, then potentially this will be invalid and price is not ready to go higher, and price will back in this trading range, and so on and so on. So we want to be out there. So this is my trading plan based on the market profile. Also watching the regular chart, obviously the bar charts, to see we're pretty much in the upward trend. And as I said, it's pretty obvious in my opinion that this is not changing in any trend or stuffs like that, because there is no big reaction here on the top. This was pretty fat point of control, very tight value here. So they just did the covering from this point here for their own reasons. You know, and investors and short mid-term traders, they're just covering on this one. But I see the potential of this one, that they actually back here to this zone again, and revisit this point of controls and this very fat, very fat point of control. This point of control is actually from February's 2nd February, right? Okay, so I know, you know, this is how I like to trade, basically. If I have a good risk reward ratio in the play, if I understand, or at least I'm trying to understand, of course we will not be always right and so on, but the point is, if I'm trying to find a good, you know, the good entries with the average 1-3 error risk control, I want to ride that, and it doesn't matter even if I'm wrong 2 times and 3rd time I'm good, I will be in the plus, because I'm going for at least 1 to 3, so 3 times more I go in return compared to what I risk. And this is how basically you can expect some return and profit, with understanding of actually what's going on and what actually have the higher probability chances to happen, to understand that the reason why you're in position and so on. It doesn't matter what you use, you need to pretty much understand what's going on, or again, at least try to understand from your side, from your view, what's actually this represent. Because in my opinion, markets sense the vibrations and sense the structures that trader needs to actually reveal, and as much the more information you have, the more you understand the structure, why actually this happened. So this happened, in my opinion, only just because they're covering their covering their long position. Okay, so they're covering the long positions, and it's quite obvious why I'm thinking that. As I said, because there is no big activity there at the top, and this is for me a big clue that actually this is the only start to sell off. It can be whatever reason. They just spotted this, that this is a not good time to continue buying, so they started to cover their long positions. And I think that they found the bottom, basically. They find the bottom here. They're trying to find the bottom at this point. They didn't actually succeed any, or they just waited for more. And previous 3 days actually showed me that they finally potentially find the bottom here. Since we are previous in the upward trend on the longer term perspective, the daily frame, I got pretty clue that this can be, price can actually go very easily higher if they decide to actually push this with good money. So obviously I will see no problem the price go to test this 130 to almost 200 pips upward from current price. And for me, this is a potential good play. As I said, stop loss is pretty much enough to be here in a single print and see how this will develop. So, you know, as we saw on the daily frame, they basically, this is a corrective movement. So I don't expect this is any big changing in trend or the previous momentum. So this is only temporal correction, some covering from these buyers here, because this buying was pretty much very fast, very strong. It was in a 1 month about 1,700 pips, and it's pretty much obvious that price will actually try to do the corrective phase and do some sell out before continuation. Interesting here is, if I spot you here, there's a 38.2 retracement. Guess what? Perfect spot. 38.2 retracement. Alright, so it makes sense that they actually bottoming here near 38.2, and also we see that in the profile that this is actually preparing for an upside, and that's why I'm in. Okay, I hope you liked my video, and if you want to learn this and how to read the structures and read the market profile, and together with other technical analysis and I'm using, then you can basically start my mentorship program. I will absolutely teach you, you know, how to read these structures and how to understand this. You know, to read market profile, also price section for itself, and so on and so on and so on. So it's a 30-day course, and I pretty much explain very, very deep every subject. Also, you can join live intraday trading room, where I post my my views, my positioning, and you know, my reading, and also price section using the Fibonacci ratios and so on, and market profile. And you know, I'm calling to join. It's only $20 a month, the live intraday trading room. Okay, that will be all for this video. Feel free to subscribe my YouTube channel. Again, I wish you good trading, trade safe, and never extend risk. It doesn't matter how it looks like and what we think. The risk is very important to keep it in control. It's the only thing we can actually control is our risk. So I will never risk more than 1% in this short-term position. It doesn't matter how it looks like. So if I risk 1%, I'm risking about 1%. I will try to take about 3% in return, or even 4%, depends on the price action. Okay, so bye-bye, and trade safe.